Yo, what's up traders? So, I think today's price action is worthy of a quick recap. I love talking trading with all of you, so I think after a day like today, before I go have dinner with the fiance and hang out with the dog, let's talk about it. Crazy shit here today, no doubt about it. One thing I want to mention before we jump into the charts here, is traders, and especially as swing traders, there's some basic principles you want to adhere to, really in any market. So bullish or bearish, there's just some kind of core fundamentals, so to say, that you really want to adhere to. And as always, my suggestion is read Mastering the Trade. If you haven't read Mastering the Trade by John, you're missing out, because a lot of these basic concepts, I've been able to build a trading career around them. And in a bullish market or a bearish market, you're going to be in good shape if you can stick to the basics. So one of the basics is, well, in a bullish market, we are probably not going to typically be well served chasing things and getting long at 4, 5, 6 ATR. It might work every now and then. You're probably not going to build a trading career around that. And to the downside, it's the same thing. You're probably not going to build a trading career around getting short. I don't even know what this is. How many average true range moves away from the 21 are we? Is that 5? You're 5 ATR to the downside this morning. So I can just tell you that right now, in terms of your next 100 trades, if you're getting long or short at -5 or +5, it's it ain't gonna work. Put it that way, it ain't gonna work. So keep those basic principles in mind. We always want to be on the right side of the market. We're always trying to play the ebbs and flows of the market, but you got to pick your spots wisely. And for newer traders, because I know a lot of you that subscribe, it's pretty likely you've been trading for maybe a year, 2 years now. It's no fault of your own, but just really understand. If you started trading back here in 2020, you only know one market. And it's a market on crack. You only know one direction. You only know one source of momentum. As things change here, again, read Mastering the Trade. Right? The basics are going to keep you profitable, whether we do continue to rally. So maybe JP and the boys pull a rabbit out of their hat on Wednesday. Maybe the bullish market is just fine. So the basics and the fundamentals are going to keep serving you well. If it's a freaking chop fest here for 3 months, the basics, the fundamentals are going to serve you well. But especially to the downside. Because as human beings, we're interesting. You give us, 30 green candles in a row, we're okay with that. Nobody flinches. But once you start getting some red on them screens, you start getting some minus signs, people get a little bit weird. So the point being is, in a bullish market, you wake up, the market's gapping to +5 ATR, you're probably pretty late. It might work that time. It ain't going to work in the long run. So shorting this morning, from my perspective, it's just about the worst entry. Everyone and their mama is already short. If you look at the put-call ratio from last Friday, here is the put-call ratio. So everybody's short. You get a big gap down. Put yourself in the short's shoes. If you're short in this market up here and you catch a 3-4% flush today, you might be thinking about taking profits. So the point being is, just pick your spots wisely, okay? Now, does today's bounce change anything? In my opinion, absolutely not. In terms of, hey, I don't want to short the market and I only want to focus on getting long again, like today wasn't even the start. For me to want to get long again, I need like 2 to 3 closes back above the daily 21 EMA. Full shift of structure, full shift of momentum, and I don't have any biases. I'm just trading off of a checklist. And mind you, we're doing the webinar on Wednesday night. I know this morning I said it was Thursday. The webinar is on Wednesday. I really encourage you to come on by. I'm going to talk about my bearish checklist, because trading should be that simple. In a bullish market, you want to have some rules you stick to. In a bearish market, you want to have some rules you stick to. But in terms of my checklist right now, this is bearish structure. Not my opinion, not my thinking. It's what the rules tell me. And until that changes completely, I still have the mentality here. I'm trying to short any bounces. The issues that we came into the week with, they don't change today. Your monthly squeeze for your S&P and for your Q-tips here, it's tired. And you keep hanging out here under the monthly 8 EMA, I think you're setting up here for a pullback to the monthly 21. So tomorrow, and especially into Wednesday, Thursday, Friday, I would like to see this bounce continue. And I'm just trying to short the market on any solid bounce. So today's close certainly looks like there's the potential here. Because keep in mind, if you're getting short this morning and you didn't tap out today, you're probably pretty quick to tapping out on a bit more upside here. So that's a game plan, guys. All right? And if you look at the small caps, these things freaking ripped today. They're ripping. That doesn't change anything, though. You have a weekly squeeze here with basically no level of support anywhere to be found, getting ready to fire to the downside. So this is the first spot I'm looking to short if the upside can continue into the end of the week here. So I'll be looking to short the S&P, the IWM, the QQQ, not all three of them. Basically, whichever one offers the best entry and the best risk reward. I think they're all shortable, but we're trying to work the numbers here. So work the numbers we shall. Now, in terms of playing the market to the upside, we did touch briefly this morning on energy and gold, and I kind of offer the same advice here. In terms of jumping, sector to sector, energy is the only thing right now with good bullish structure. You have XLP as a close second. That's decent, but I think energy is a little bit cleaner here. So energy is interesting. However, I'm kind of liking gold a little bit more. I'm liking gold a little bit more here. Energy's solid, but you got earnings this week, you got all that crap. For gold, it's just pretty straightforward. Monthly squeeze, weekly squeeze, 3-day, daily. My thinking is, I think that weekly squeeze gets gold up to about 180. And you might have more upside given the fact that you got squeezes stacked on top of squeezes here. However, I'm looking for a move here in the short term. I'm going to give it wiggle room. I'm going to give it breathing room. But what I'm trying to say is, I don't really have any interest in taking gold for a ride down to 165. So my game plan here, I want to get long on any dip that we might get over the next few days, but my exit is going to be on a close under the weekly 21 EMA. Now, if gold is really serious here, here's why I like that. Every week, your 21 EMA on the weekly chart, it should lift a little bit. So it almost serves as a trailing stop of sorts. So I'm just trying to get a bit of a dip here, work a better risk reward with an exit down around 169, and that initial upside target right up around 180, maybe a little bit higher. So for those of you in my mastery and the options room, that is on the agenda for the rest of the week. Can we get a dip here in gold, and can we get some continued bouncage in the indexes, which I think is going to offer pretty good short opportunities. But just remember the basics, right? The fundamentals. You build an entire trading career around the basics and the fundamentals. The basics, they're going to serve you well in a bullish market, a choppy market, or in a bearish market. So when I look at my IWM short from a few weeks ago, we're shorting up here near the 8 EMA. So you're kind of in that daily squeeze, and we're taking profits on the flush. Just the ebbs and flows. Really simple. So in terms of playing the ebbs and flows, at this point, I think you look for a continued bounce to the upside, and then you short it, and you look for another break of that recent low. But you're trying to work a good risk reward. So my favorite thing about the IWM trade that we had last week was our profit target was down here at 200. We're getting short up here around 212, and our exit was on a close above 222. Which was the weekly 21 EMA. And as a reference, now the weekly 21 is at 218. So these weekly moving averages, they can really serve as a trailing stop of sorts, which I kind of fancy in this market. But my favorite thing about that trade is the profit down here at 200 was like $115, $120 per contract, versus a risk up here at 222 of like $45 per contract. That's the numbers I'm trying to work this year. Risking $50 to make $100. Risking $50 to make $150 per contract. That's the kind of numbers I want to operate with. But I'm trying to do that all within the realms of good entries, good decisions, and not taking action based on FOMO. Just my opinion, if you're shorting the market at the bottom today, you're probably going to think it was the bottom. But the point being here, my friends, is you're in the hole. freaking -5 ATR. I mean, if you're trying to short here, you might be a little bit late to the party. So if you happen to get short this morning, I've been there, never fun. You take your licks, you learn your lesson, and I think you like to short the market should the bounce continue. But as always, guys, I appreciate y'all being subscribers. I think we are creeping up on 10,000. 10,000 subs. So we'll do a giveaway or something. Maybe give away free access to the mastery for a little bit. We'll figure something out. But you're very much appreciated. As always, I hope you find these videos helpful. And my goal right now is, even if they're shorter videos like this, 5 to 10 minutes, I want to crank out as much content as possible. I really appreciate you subscribing to the channel. So I kind of feel like I got a responsibility here to provide good value, especially during an interesting market. So the future's opened up here. Everything looking a little bit flat, but as we know, there's plenty of time between now and the open. So I hope you had a good Monday. Hope you found this helpful, and I'm sure we'll be talking tomorrow, and I know we'll be talking on Wednesday, and probably every other day this week. So I'll talk to you then.